Is the union in the clear? To break it all down for us, we're joined by Dan Mitchell. He's an economist and senior fellow with the Cato Institute in Washington. Dan, is this a surprise that they're out of a recession now?
If there was a prize for the worst good news category, this would be it, because it is good news that they're out of a recession, but 0.3% growth is hardly something to be celebrating about. And Europe still faces the big long-run problems of too much government, too much regulation, taxes, spending that have been weighing down the Eurozone, indeed the entire European Union. So I don't think they're out of the woods at all, but it is good news that at least they're getting a tiny bit of growth.
Italy, Spain, Greece, I mean, they're still contracting, right?
Yeah, what we basically see in the Eurozone is that France had, I think it was 0.5% growth, and Germany had 0.7% growth. Those are horrible numbers in an average year, but considering how bad Europe in general and the Eurozone specifically has been for several years, I guess that's a reason to pop open the champagne corks. But Southern Europe, I mean, they have not climbed out of their economic and fiscal crisis. There's very little reason to be optimistic about any of those countries.
What about the high unemployment rate?
Well, I think it's basically a function of the fact that if you're a business in Europe, hiring someone incurs all sorts of potential liabilities because you can't fire them. You have very high employment-oriented taxes to hire somebody, and your overall economy is so weak that really what's the whole purpose of hiring someone? So this is one of the reasons why it's very difficult to see how you pull out of this downward spiral unless there's some sort of political revolution where you bring in some sort of Thatcher or Reagan type political figure. And as far as I can tell, nobody is predicting that for any of these Club Med countries.
Right. How important is Germany to this recovery?
Well, Germany is the biggest economy in the Eurozone. I mean, I suppose if you were to think about it from a Canadian perspective, it'd be like Ontario, or from the U.S. perspective, Texas. So as long as Germany is growing a little bit, that's presumably good news. But the problem is, at least if you're one of the other countries, Germany's an exporter, not an importer. Now, that's, to Germany's credit that they're competitive in global markets, but I don't think German growth is really going to be an engine that pulls some of these other countries out of their doldrums.
Right. And what about in terms of the austerity measures? How are they going with countries like Portugal, Italy, Spain?
The problem is that austerity in the European context doesn't mean controlling the growth of government. It means raising taxes. So you have the IMF and the other pro-austerity people saying, raise taxes, raise taxes. Well, of course, that means the private sector can never get off its feet. And on the other hand, you have the so-called growth people who are really just Keynesians who are saying, well, let's double down on the problem of too much government spending. There's only a tiny amount of countries in Europe that I think are heading in the right direction. Switzerland, which has stayed out of both the EU and the Eurozone, they're doing well. And then the Baltic countries, most people don't even know who they are, Estonia, Lithuania, Latvia, they actually cut spending and stayed away from tax increases, and they've been growing. So they've done the right thing. They've tried to reduce the burden of government, much as Canada did in the 1990s, and they're getting some rewards for that. But whether you're talking Spain, Italy, France, England, all these other countries are, the burden of government is just too large to allow the private sector to thrive. And without a thriving private sector, there's no jobs.
That's right. Okay, Dan, thanks so much for joining us.